for, is about, and all-in sustaining costs, of course, is different than cash costs of mining. Very different things in today's world. But it's about $1,000 an ounce, but gold's at 2,000.
Bring it back to commodities and in the investing space. You mentioned you do like the commodities right now. You're long gold.
I have for a long time.
Right.
Yes. So I've been very long gold, but I've been long gold since 1971. Frankly, when I bought my first gold coin, and I still have it. And it's been a pretty good run from $35 to $2,000. I mean, it's not as good as having bought Berkshire Hathaway and holding on, but it's been okay as a way to save, which is the way I see gold.
You've lived through several decades of tumultuous times. What typically performs well during periods of heightened geopolitical tensions or even just armed conflict in general?
People like to have things that they can trust, they can hold in their own sweaty palms when the going gets tough. You can't trust the dollar. Its fate is basically sealed. It's well on its way to being inflated out of existence. You can't trust the banks. The whole society is greatly over-financialized. So I think there's going to be, I think gold and silver are going a lot higher. I'll say that with the proviso, though, that in terms of purchasing power, gold is reasonably priced relative to what you pay for a meal or a house or a suit. Well, most people don't wear suits anymore. But gold is reasonably priced. It's a speculation, not terribly interested in it, but I don't view gold as a speculation. I view it as a savings vehicle.
When you say something is reasonably priced, you're probably assigning a fair value to it. Relatively speaking, to the fair value is reasonably priced. So what is that fair value for you?
Well, look, most commodities, everything tends to revert to the mean. So what is the mean for commodities? It's generally production costs. In other words, the price of soybeans generally rotates around plus or minus, depending on a lot of factors, what it costs to produce a bushel of soybeans. A pound of copper revolves around the price that it costs to produce it. Gold is a special situation because its primary use is not industrial, it's as money, okay? And the all-in sustaining cost of mines in the world to produce an ounce of gold today, on average, some are much less, some are much more, is about, and all-in sustaining costs, of course, is different than cash costs of mining. Very different things in today's world. But it's about $1,000 an ounce, but gold's at 2,000. So gold mining companies are the ones that are producing, are actually minting money. And from gold mining companies are, which have been, they're the most volatile securities on the face of the planet. They're more volatile than internet stocks were, quite frankly. Right now, in terms of real value, how much money they're making, gold mining stocks are the cheapest securities on earth. And that's where I am, quite frankly. Not as cheap as, look, here's a little bit of history that most people will be completely unfamiliar with and will be shocked to hear. Back in 1976, you could buy South African gold mining stocks. They've all gone out of existence. They've been merged and so forth. But there were several stocks that I bought a lot of. Rootfly, Bracken, Leslie. These stocks were yielding, believe it or not, 50 or 60% in current dividends. And then that was in 1976 when gold was $100 an ounce. And then when gold ran to 800, I was getting several times what I paid for them every year in dividends alone. Could we see a repeat at this point? That's how cheap these things can get. Maybe it's, yeah, so gold stocks are the place to be. Also uranium stocks, I've got to say, because oil, especially with these problems with Russia, with oil and natural gas, and Saudi Arabia and Nigeria. It can be real chaos. So I think all the commodities have reached a new equilibrium level, a new and higher equilibrium level. And for oil, I'm guessing that it's going to be someplace in the $90 area. And, if real chaos breaks out in the world, sure, gold could run to 2,500, 3,000, no problem. At some point, I think gold is actually going to be reinstituted as money because nobody trusts the dollar. And frankly, nobody really trusts the yuan. And why should you trust the paper currency of any government? Because we find they can be locked down, they can be frozen, your accounts. So yeah, you want gold and silver in your own possession. Sounds primitive, but it's smart.
We're talking about ways investors should be positioned in preparation for potentially an escalation of this conflict or any future conflict down the line. Now consider this, Doug. Since the end of the Vietnam War in the late 70s, since the 80s, the early 80s, let's just keep it to the last 40 years, we've had only 4 major bear markets or market crashes, if you want to call it that. 1987, 2000, which was the tech bubble burst. Now 2008, the great financial crisis, and of course 2020, the onset of the COVID pandemic. Now, none of these scenarios that I've listed, the 4 bear markets, were caused by the onset of a war. You'll recall that the invasion of Iraq began in 2003, which was followed by the second longest bull market in American history. What I'm saying, Doug, is that if history repeats itself, does it not stand to reason that the stock markets could continue rallying despite a war? Maybe markets like war.
Okay, that's possible, even though war destroys real wealth. But the bull market that we've experienced for a couple decades now is basically caused by the Fed printing money, printing trillions of dollars worth of currency units. And most of that has flowed into the stock market. That's why the rich have gotten richer in recent years at accelerating rates, while the poor have gotten poorer. That's going to accelerate too, because now finally all this money printing, all this currency unit printing is started to filter down from the financial markets, which have good inflation benefiting the rich, to retail inflation, gasoline prices, food prices, rent prices. So this is terra incognita we're in right now, where at this point, the US government is mainly financed by printing money. It used to be, remember, we'd borrow money from the nice Japanese and the nice Chinese, and they lent money to finance US government benefits, deficits. They don't do that. They're liquidating all their dollars. The only source of borrowing now available is the Federal Reserve.
Sure. The
US government sells its bonds to the Federal Reserve. The Fed credits its accounts at commercial banks with dollars. That's actually the engine of inflation. And we're going to see a lot more of it. So count on inflation going a lot higher and the standard of living going a lot lower in the years to come. One of the guarantees for that, incidentally, is the fact that Washington, D.C. Is now controlled by, well, I hate to say, actual Bolsheviks, actual Jacobins. Well, they're not Jacobins and Bolsheviks, but the people in Washington.
Figuratively, of course. I don't think they're actual Bolsheviks.
No, not actually. But I'll say this, they share the same philosophy, the same economic and political outlook as the French Jacobins and the Russian Bolsheviks do. They really do. They believe in state control, much more government. And of course, as things get worse, the average American is going to say, do something, because the average American thinks that now that the government is the solution, not the problem, and they'll ask the government to do something. And of course, the government will do something. They love to do that. And it's almost always the wrong thing. So I'm really quite bearish. And in the markets, I'm in the futures markets, because I trade a lot of commodities, I'm generally short the S&P, short bonds, and I have been long gold and silver. So that's how I'm treating it as a general rule.